Hey everyone, welcome back to the channel, and welcome to Finance Flicks Hub. I hope you're having a great day. Today we're talking about XRP and the overall market situation. But before we start, this content is only for help and education. As always, do your own research before making any financial decisions. Let's begin. 1. Retail still misunderstands how access may change. Many people still expect digital assets to work exactly like they do today. But as adoption grows and institutions begin using blockchain technology for settlement and payments, access models may evolve. Nothing is guaranteed, but history shows that assets used for infrastructure often become handled differently over time. 2. Why retail often reacts emotionally. Retail investors sometimes react based on emotions, fear, excitement, and market noise. This can lead to decisions based on short-term movements instead of long-term understanding. It's important to stay informed, think independently, and always research from multiple sources. 3. Institutional interest is increasing across the market. Across the digital asset space, institutional attention has grown over the past few years. This includes custody services, regulated products, and standardized frameworks. This doesn't guarantee any specific outcome, but it does show that digital assets are gaining attention in professional sectors. 4. Market supply and liquidity are always changing. Circulating supply, locked supply, and overall liquidity all play a role in market behavior. As more assets move into custody, staking, or long-term holding, it can affect how much supply is available on the open market. Always check up-to-date data instead of relying on assumptions. 5. RLUSD and cross-network movement. New stablecoins and payment models aim to make value transfer easier between different blockchain networks. This can introduce more users to digital assets and may encourage businesses to explore faster and more cost-efficient settlement layers. These changes take time, but they show an ongoing shift toward digital finance. 6. Thinking beyond just price instead of only focusing on price charts. It helps to understand utility, adoption, real-world use cases, liquidity, behavior, market maturity. These factors often matter more than temporary price swings. Price always follows utility over time in every market. 7. Passive rewards and long-term utility models. Many networks are exploring passive reward systems such as staking, validating, or providing liquidity. These models can contribute to long-term participation, but they also come with risks. So always research the mechanics before engaging in any reward program. 8. Global institutions want faster and cheaper payments around the world. Financial institutions, banks, and payment companies are exploring new technology for faster and more efficient transactions. This is a general industry trend and one of the main reasons digital assets gained global attention. 9 different regions have different approaches outside the US. Many regions focus heavily on utility, regulation, and technical development. Every region grows differently, so it's important to understand global viewpoints rather than only local narratives. 10. Regulation continues to evolve around the world. Regulatory bodies are establishing clearer rules for digital asset custody, payments, and tokenization. Okay, this doesn't guarantee outcomes for any specific asset, but it shows the industry is maturing step by step. 11. Bitcoin versus utility networks. Different purposes. Bitcoin is widely seen as a store of value. Other networks, including XRP, are designed for fast transactions, liquidity flow, and settlement purposes. They serve different roles, and comparing them directly can miss the bigger picture. 12. Long-term holders versus short-term traders. Short-term traders focus on volatility. Long-term holders focus on utility and adoption. Both approaches exist, but it's important to choose the strategy that fits your own research and risk tolerance. 13. Tokenization is a growing trend. More companies are exploring tokenization of assets, like real estate funds, payments, commodities. This may expand the use of blockchain technology in global finance. creating new opportunities for fast settlement networks. 14. Market repricing happens when utility expands. Whenever new use cases are adopted, markets naturally adjust. This can happen slowly or quickly, depending on demand and liquidity conditions. Nothing is guaranteed, but watching adoption trends helps you understand long-term movement. 15. Current market conditions show consolidation. Many digital assets, including XRP, are in a broader consolidation phase. Consolidation often happens before larger moves, but direction is never guaranteed. Always monitor the market with patience and a long-term perspective. 16. The big picture. Digital infrastructure is growing. The real transformation is not only about price, it's about global financial systems upgrading their technology. Digital assets are increasingly being explored as tools for payments, settlements, liquidity, and tokenized value movement. Understanding this bigger picture helps investors stay calm during short-term noise. Ending message, safe for YouTube. The digital asset market continues to grow. Adopt new tools and gain attention from both institutions and everyday users. The key is to stay informed, stay patient, and always do independent research from reliable sources. Thanks for watching. Thank you for spending time with Finance Flix Hub. If you found this breakdown helpful, make sure you subscribe to the channel for more educational content. Stay safe, stay informed, and see you in the next video.